Hey everybody, what's going on? It is James here with Crypto Common Sense. Wanted to shoot a market update video for you. It's September 20th, just after 11 p.m. Central Time. And it's been a little while since I did an update, a day or two. And it's the same old story. It's not that I'm not wanting to do updates, it's just that the market is moving sideways and there's really not a lot to add. So rather than doing a video every single day and just regurgitating the same content, I try to take a little space and try to see if anything forms up or if anything changes, and if some new idea gets brought to the plate, that I want to share that with you. So that's what I'm going to do today, is share some ideas, share my overall outlook, and again share with you why I think the market is just grinding sideways versus moving up or down. Before I jump into that content though, please do me a huge favor, go ahead and hit the thumbs up button on this video. Also subscribe to the channel if you haven't already. So let's jump into the video here. This is obviously a Bitcoin chart. And you can see I've got a couple different things drawn on here. So I want to start off today with the bullish scenario. I want to talk about the bull scenario before I talk about the bearish scenario. So what I'm going to do is I'm going to turn all my moving averages off, my EMAs, all that kind of stuff. We're just going to look at chart patterns. And I want you to pay attention to this yellow pattern. So in past videos, I've drawn up these Fibonacci levels and basically said that if this thing started to go north, that my particular entry would be somewhere around 11,700 and that my target would be around 19,800. And so that looks something like this, right? And what I did was I just copied the length of the move from the bottom to the top here and then pasted it over. Now, there's actually a setup for that. It's called a breakout setup or a breakout target. But listen, there's actually a lot of different patterns that support that. One of those patterns happens to be this yellow pattern that you see drawn here. This is actually a bull pennant, okay? Basically, it's called that because it looks like, one of the old school baseball pennant type deals. So it goes up, forms this, basically a triangle. It tends to be a symmetrical triangle. It's normally not a descending triangle, so that's up for debate on whether this is a symmetrical triangle, but for this argument we're going to say it is. And then you just basically measure the length of the move from the bottom to the top and copy it over, and it looks like this, and here's your breakout target. So that's the way that actually works. So I'm still watching for that 11,700 area is my entry, and that entry, the reason that's so important is because that keeps me from being faked out if we have a small breakout above this triangle, right? If we break out to 10.5 or even up to 11,000, rather than going long and then getting dumped on, if we go all the way up to 11,700, it's a pretty good bet that it's going to continue going north. Not guaranteed, of course, right? And yes, I'll miss some profits on the way up to that level, but that's the name of the game, right? Risk management. So that's kind of the bullish scenario I'm looking at. But I want to talk a little bit more about some of these bear scenarios, and I want to talk a little bit more about some of the stuff I've talked about in a couple other videos, maybe just mesh it all together into one video for you. So essentially, I do believe that we're still in distribution. I believe that this was accumulation down here, and that this was all the market phase, that this is distribution phase, and that fairly soon now we're going to get our markdown phase. And of course, the markdown phase, that could go as low as, it could go really as low as zero. I mean, if we're talking honestly here. But I don't expect that, obviously. I've been expecting it to drop down to around 4,200, but there is the possibility that it goes lower than that, fills in that old gap around 1,300. We're going to talk about that in just a second. There's also a possibility that we're actually in a much, much larger market structure. It is, in fact, possible that we're actually looking at something more like this. This is actually the December 2017 high, and that this was all one giant triangle, right? I talked about this a little bit in past videos, but not real detailed. But this is actually feasible, right? And it could be that we're going to see something like this where we drop down to around 8,000. We have a dead cat bounce, right? Drop down to around 7,000, dead cat bounce, and then drop down to around 5,000. And we basically would just be coming right back down to this trend line. Now, what I want you to pay attention to in this photograph is I want you to pay attention to the time, because I actually drew this to scale. I can't call the bounces or anything like that, but as far as the bottom, the reason this is drawn like this is because this would be our W, right, which is our reversal signal. If you don't know about W's, study those things. They're double bottoms. They tend to be reversal signals, right? You'll find them at the bottom of downtrends. And the reason that I drew this right around the March or April of 2020 area is because the halving is actually in May of 2020, and historically that has been the event that kicked off the bull run. Just like it did the last time, right? People are saying, oh, the bull run really started, hot and heavy in 2016 and really ramped up in 2017. Yes, the halving was in 2016, right? If we look it up, we can Google it real quick. All right, so I found this article. It's over on medium.com, and you can see that they've actually done a really good job of figuring out the math for us and figuring out all the details. The first halving was actually on November 28th of 2012. Second halving was on July 9th, 2016, and the next one is scheduled for, of course, May or June of 2020, and that varies a little bit depending on the hash rate. It could even be a little sooner than that, depending on how fast those blocks are mined. So if you look at that, the all-time high after this 2012 halving happened 369 days after the halving. The second halving all-time high happened 526 days after that halving. And this isn't really the information I was looking for, but we can actually find out for ourselves. So let's go look at the chart and find out when the run started. So again, the first halving was going to be in November of 2012. Let's take a look at the chart. All right, so this is a Bitstamp chart. And again, I like Bitstamp's charts because they actually go back all the way to 2012. So if we take a look at the 2012 market here, it was basically just a flat market all through that year up until, again, the halving happened on November 28th of 2012. So that basically was right about that week right there. And now look what happened right after that. Do you see this? I mean, you'd have to be blind not to see it. Price, when it halved, was right around 12 bucks per Bitcoin. Ironically, this is about the time that I first looked at mining Bitcoin and told my business partner at the time, that shit looks like a scam, I'm not touching it. Oops, bad call. Bottom line though, right after that halving, that is when the bull market kicked off, and it was basically a year later that you saw it top out completely. This is actually about 4 or 5 months later, right? This was 5 months and it went all the way up from around 11 or 12 bucks 260 bucks. So essentially, you didn't have to wait until 2017 to get rich. You didn't have to wait until the $1,000 bubble. You could have invested a fair amount of money in November of 2012, right at the date of that halving, and just 6 months later, or less than 6 months later, you could have basically 20x your money. So again, let's measure that. Let's take a look, and we can say that from the time of that halving until the time that that market really took off, right? I mean, it really took off. It was really only about, what, 2 months, right? 70 bars when it really started to ramp up there. After 2 months, the price had basically doubled, okay? We're not even going to count these peaks. We're just going to talk about doubling in price. It took a little over 2 months after the halving. Okay, let's go back over to medium. The second halving took place on July 9th, 2016. Back to our chart. So we're going to take a vertical line. We're going to stick that thing on July 9th of 2016. Okay, right here was the week of July 9th, 2016. And if you look what happened right after that halving, right? Try to make this a little easier to see. Holy shit, that's when the run started, right? Now, it had actually picked up a little bit before that run, full disclosure, but it had not hit anywhere near all-time highs. The all-time high at that point was up around 1,200 bucks. The highest it had gotten to on this rally was up right around $778. So nowhere near that all-time high. It didn't make a new high until after the halving. And if we measure this out from the halving until the point where it went up and actually broke that old high, that took about 231 days before it broke the old high. Okay? And on the date of the halving, it was around 600 bucks, 700 bucks. So it took about the same amount of time, about 7 or 8 months before it doubled in price. 7 or 8 months. Now, the reason that's important is because I've mentioned this in another video. There have been actual studies, like actual articles written and researched about this, how the market cycles are getting longer, not shorter. What that means is if they're getting longer, we have to expect a longer bear market too, not just a longer bull run, but a longer bear market, right? Back here in 2012, when this first bubble popped, right, it actually ran up in April of 2013. It ran up, again, it went up over 20x, the bubble popped, and that bear market actually only lasted a couple of months. And then it went up and made a new all-time high. And then that bear market lasted about a year or so, right? From that high all the way down to the actual low, it took about 413 days. Well, if we look at our current market, right, if we go from the high to where we are right now, that's 644 days, okay? But yet, people are trying to say that they know for sure we're in a bear market and that this was our low way back here in December, which was only 364 days. That means that this bear market would have been shorter than this bear market. That goes against what the statistical data says about these market cycles. It says they take longer to play out. So now, let me show you something else. In the 2013 bubble, I can't talk today. In the 2014 run-up, in the 2014 bubble pop, right, there was actually a descending triangle. I'm going to talk about two descending triangles. First, there was this false rally, and you had this rough descending triangle right here, and then you had the price collapse, okay? And if you look at a daily chart, there's actually two of these things. Let's just talk about this one. So you had this run-up, okay, and then you had the price collapse, and it actually went all the way back down here where people thought it could never go. Right, all the way back down to about 150 bucks after it had been all the way up to around $1,100 or $1,200. People thought that this was the low. Now, in hindsight, we can look back and say, oh, well, it's obvious that wasn't. But guys, watch. Okay, I want you to pretend that you don't know the future and that you don't know what happened here. If you saw this chart and it was playing out like this, and this is a weekly chart, okay, if it's playing out like this, here you were at 1,200 just a couple of months ago. You know, things are going good here. Here's price moving around. You've made a low over here of 386. Let's pause this a second. If you're drawing your Fibonacci levels, you know, let's just say you're drawing them from right back here. Yeah, really, let's draw them right here. All the way to the top here. Okay, here's your 61.8 fib, which is your golden reload zone, right? Bam, you've come down inside that sucker. Life is good. It's time for a new high. All right, so let's hit play. So you're playing this. Let's say that you bought in the golden ratio. You're feeling good. Okay, it's coming back down. You're getting a little nervous, but it's all good. You're still in your golden ratio. It still hasn't made a new low. Okay, there's a new low all the way down to the 78.6 almost. Still pretty nervous, but it's looking good. You know, you've pulled back 70, 80%. And I want you to really think about this. Think about this as if you were trading this and it was, 5 years in the past. And then what happened next? This thing started rallying. And right about here, your thoughts of a bear market would have been over. Right about here, you had made a new high. Price had come down. It had made a new low. And it was starting back up. Look at this. Everything is good. Wait a minute, what's happening? We're moving sideways. We're not making new highs. And it shit out the bottom. And even here, if you were trading back then, you would have thought that it was all good, that you were just retesting all the support and you're going to keep going up. That this would probably end up being one giant W, right? That's not what happened. What happened was the real bear market was still happening, right? And price ended up going all the way down to 150 bucks. We can watch this play out in real time. There it is. Bam, $150. No one saw that coming. At the time, no one saw that coming. Went way below the 78.6, and what did it do? It went way back down here and tested the breakout. Okay? So let's look at the current cycle. If we know that these things historically, statistically, are taking longer to play out, and we know that, and by the way, you can't predict future performance based on past performance, right? That's kind of a golden rule, is don't think too much into this. It's okay for a guidepost, but don't swear by it. But it's very possible that this is what we're in right now, that we're actually in our dead cat bounce of our bear market, which means that, just like I've been saying this whole time, it could be that we are going to go down here to this area in 5,000, or it could be that we're going to go all the way down here to 4,000, 4,200 and retest this breakout, or it could be that, just like in 2014, we are not done with the bear market and we actually have yet to make our true low. Okay? And if that's the case, the natural point that we should be aiming for, if this is indeed an extension of the bear market, is going to be this old gap right in this area, which we've talked about many times now. Okay? I'm not trying to beat a dead horse. I'm just trying to give you a different viewpoint on why this is a plausible scenario. Way down here. Now you might be saying, James, there's no way the miners are going to let it get that low. James, there's no way it's happening. Bakkt is launching, in just a few days, Bakkt is coming out and they're going to send it to the moon, all that kind of stuff. Listen, you just got to do your research and your due diligence, guys. When CME launched, the same talk was going on. Everybody was talking about how CME was going to send this to the moon. And that talk got a lot of people in a lot of trouble, including myself. CME launched on December 17th, 2017. The market topped on December 17th, 2017. And basically once CME went live, the bear market started. And they pushed this price down, okay? So when I think about that, I think about the effect that CME had in the market. That tends to be my bias. I tend to think that Bakkt is going to be a repeat in the same way, and that they're actually going to send it down, right? And this time we're starting from a much lower point. We're starting from around 10 grand, or at least right now, the price is around 10 grand. And it makes sense to me that, it could go even lower than it went the last time. And then these big institutions that have been waiting patiently on the sidelines, especially if they have inside information, which, let's just be honest, guys, insider trading happens all the time in crypto. If you don't believe that, just go look at a chart of Dash, right? There was no real reason to think Dash was turning the corner here recently, but all of a sudden price started to spike. Somebody was actually asking about it in my Facebook group, and I said, I'm looking at the chart. I don't really see anything that, from a chart perspective, that makes me think this is a great investment. Maybe there's something else going on. And then a couple days later, oh, look, suddenly it was magically announced that it was going to be listed on Coinbase. If you are trying to convince me that those people weren't inside trading that, I'm not buying that for a second. Somebody had that information and they were trading on it. They were accumulating Dash before it got listed on Coinbase, point blank, right? So yeah, I think these big institutional investments, I think they've got inside information, right? And I definitely think that there's some collusion that goes on. Maybe I'm just a tinfoil wearing guy. Maybe I'm crazy out of my mind. But again, if you're going to invest millions and millions of dollars, would you rather buy Bitcoin at $10,000, or would you rather wait, crash the market, and buy it down at $1,300 or $1,500? And you have to remember that in markets, right? The market, the big whales, this is a zero-sum game, right? The only way they make money is by taking money away from other people. It's basically transferring wealth from for lack of a better term, the dumb money, the retail investors like myself, right, over to the big money or the smart money, the guys trading with hedge funds and millions of dollars and things like that. The way they do that is by feeding misinformation to the market. The way they do that is by making the average Joe or average Jane think that XYZ is going to happen, and then doing the exact opposite, often with a fake out. So often they'll, if they're going to dump it, they'll often start to pump it. So the retail investors start to go long. They provide tons of liquidity so they can open a short, and then they dump it. Or if they're going to go long, they dump it first so that there's all kinds of average people selling, and that they're able to buy with plenty of liquidity, and then they pump it, right? The average investor, ask yourself, what do they think is going to happen when Bakkt launches? The average investor thinks it's going to pump the market, just like they thought CME was going to pump the market back here. That's the exact opposite of what actually occurred. So do I think this is going up? No, I still think it's going down. My only real question right now is, how far is it going down? I'm 95% sure it's going down, right? If I wasn't that sure it was going down, I wouldn't do video after video after video, spewing this stuff. Because if I'm wrong, and it's possible I am wrong, I've got to come back and face, the fact that I did 30 or 40 videos saying this is going down, this is going down, this is going down, I think it's going down, right? I never actually said it was going down. I said I thought it was going down. I still think it's going down. I'm still 95% sure it's going down. But if I'm wrong, there's an awful lot of crow waiting for me to be eating it, okay? The only thing that I'm really not sure about is how far, right? It could be that this is not a B leg. It could be that we really are just going to have a normal correction, go down to this, that 61.8 fib and start going up. It could be that all we do is fill the CME gap and go up. It could be that we never go down. It could be that we go down to 5,500 to 7,500, which would be like the three peaks pattern that I've talked about, right? That we consolidate and then go up. It could be that we go down and retest this old resistance flip support right around 4,200, or it could be that this is actually a repeat of the 2014 market, and that this is actually an echo bubble, and it's going to go all the way down to 1,300 to fill this old gap, which personally, as much as it would be nice when it actually got there, it would be very stressful along the way, because I'm going to be buying Bitcoin as it goes down, and I don't enjoy the idea that I might be catching falling knives when I start buying at $7,000, or when I start putting money in at $5,000 and $4,000, etc. So it's not that I'm jumping for joy going, oh, I hope this happens, I hope this happens. Because honestly, I don't know that I do hope it happens. It just seems like it would introduce a lot of stress in my life, and I'm not a big fan of stress, right? I would much rather it go down quick, dirty, get down to 4,200, fill my bids, and then go up. Because even if you're buying at 4,200, then it drops to 1,300, guys, that's a 60% loss, right? I mean, we're talking, 10 grand, 12 grand, 13 grand lately, so it doesn't seem that bad. It's massive. If you bought at 4,200, right around this area here, and it fell to 1,300, that is a 67% roughly loss. So if you put in, just for nice round math, if you put in $100,000, that's a $67,000 drop, right? And the other thing I want to talk about is the fact that everybody just automatically assumes that we will go back to old highs and that we will make new highs. I'm one of those people. I've been guilty of it in past videos. I just take it as I take it for granted that we're going to do that. But the reality is there's no guarantee that ever happens. There's no guarantee that Bitcoin ever goes back to 20 grand. There's no guarantee that Bitcoin ever goes back to 13 grand, right? We're all assuming that that's going to happen because we're a little bit blinded by the fact that, that's what's happened in the past. But there is no guarantee of that. We are talking about big money entering the space, players like CME, players like Bakkt, and it could be that this becomes more like silver, where the price is suppressed and it never goes that high, right? Silver should be worth much more than $17 an ounce right now, but it's been suppressed by big money, okay? And Bitcoin might be next. It might be that they don't want Bitcoin to get big. They don't want Bitcoin to become the next, version of gold, so to speak, and that they're going to do everything in their power to keep it low. Time will tell. But you can't ignore this fractal. You can't ignore this and say, okay, this has never happened before. There's never been an echo bubble, et cetera, et cetera. It's like today on Twitter, a trader with a lot of experience said, that a descending triangle, it's very rare for it to break north when it starts at the top of a rally. And I just thought to myself, well, I don't know whether it's rare or not. I've never really looked at how rare it is or how common it is. But I know that in 2012 it happened twice. Right? If we go back and look at 2012, where's 2012? Right? So it happened right here. Big ass rally, descending triangle, bam, it dumped out the bottom, starting from the top. Right here, it happened again, big ass rally. There's the top. There's the descending triangle, dumped out again. So it happened twice, right? Not once, it happened twice, both times. And if you look at 2018, look, okay, so here's these two descending triangles. Remember I said that the market is taking longer to play out now than it used to? Well, what's that? That was a giant descending triangle, right? And it formed over the course of about friggin' 9 months. It's a 9-month triangle that it formed in. And if you were trading at this time, you'll remember people calling for $3,000 and calling for $1,000, and a lot of people saying that they were crazy that the low was in and they were just salty that they weren't going to get to buy cheap Bitcoin, and then it dumped. And now what do we have? We have another descending triangle. Please tell me how that doesn't look just like this, just on a longer time frame. How does that not look exactly like this, right? Well, not exactly, nothing's exact. But you see what I'm saying? We had the big pump in 2014. We had the triangle, we had the dump. We had the big pump, we had the triangle, we had the dump. And then you have 2018, it came down, had the pump, wasn't that big, really wasn't, had the big triangle, had the dump, and now all of a sudden we've got this another big pump and another triangle. So it's just logical to accept that this is plausible. Maybe not probable, but definitely plausible. All right, so let's move on. Let's talk about a few other things real quick because this video is super long. The other thing I want to talk about is the fact that, in fact, you know what? I'm not going to talk about anything else in this video. I'm just going to say, keep an eye out, be ready for Monday, right? Today is obviously September 20th Central Time, so September 23rd is when Bakkt launches, and I think it's going to be explosive. And keep in mind that if you're following the GAN principle, that it predicts that we'll be down to the $8,500 level no later than September 30th of this year, which will be right here. So it'd be awful hard to pump and still get down to the 8,500 before that line. Not impossible, difficult. And of course, it's not guaranteed that we even get to 8,500. So I hope you guys enjoyed this video. It's a little more in depth. Keep in mind that the whole video started with talking about the halving next year. That halving, again, is going to be taking place sometime around May of next year. So that would mean that that would be right around here, okay? and historically the bull runs start after the halving. So it would be totally feasible for this thing to come down, fart around, and then start that next bull run in the middle part next year. And by the way, again, I'm a bull long term, right? I do believe that we are going to go make new highs eventually, and I believe the next market cycle will go much, much higher, right? But I can't guarantee that, obviously. I could be totally wrong. It could be that it never goes back up. But this is what I'm waiting for. And if we are indeed in distribution, a drop is a part of that. It's just a matter of figuring out how low that drop's going to go. All right. With all that being said, please remember I am literally some guy sitting in a spare bedroom, not a professional financial advisor, not your financial advisor. Nothing in this video is financial advice or trade advice. You should always do your own due diligence and seek out professional investment advice before making any type of investment. If you enjoyed this video, please be sure and give it a thumbs up and subscribe to the channel if you haven't already. Also, don't forget you can check the description for links where you can follow me on TradingView, Twitter, and also where you can join my free Facebook group. And please leave me a comment. Let me know your thoughts on this. Do you think this is possible? Do you think I'm just out of my mind? Are you bullish? Are you bearish? What are your thoughts? This is James with Crypto Common Sense. Trade safe.